In this episode of Beyond Bitcoin, price goes up, but it's not going up. What's the difference between this halving and the previous halvings? CPU and AI, why are they impacting the price of Bitcoin? And overreading the market, we all do it, and some tips of how not to. I hope you enjoy. Good morning. Welcome along to another episode of Beyond Bitcoin. My name is Derek Graham, and with me today is Nitin Gaur. Of course, we're going to be talking about the markets today, aren't we, Nitin?
Yes, we are, and there's a lot going on, Derek. So let's get going with this. There's
Excellent.
some really cool stuff happening in the industry.
It's extraordinary. So now, Bitcoin's not doing what it's meant to do. It's meant to be going up. That's what everyone says. And it's also meant to be getting to 100,000 by the end of the year. It hasn't shown that. It's down to about 60 at the moment. Is this unusual?
Yeah, I think it is. And if you look at the history of pre-halving and post-halving, Bitcoin has always is about 6 to 8 weeks and sometimes 3 months. You begin to see the Bitcoin rise after the halving because it gives time for the markets to absorb the data, both in terms of production lines, which is the mining companies, but also in terms of consumption. But I think this time, and I'll say this adage, which has been commonly used, it's different. And Derek, it's different because we've had enormous amount of pressure from ETFs and institutional play with Bitcoin sort of consumption, Michael Saylor going on his buying spree. But I think there's a lot to be said about the lessons learned in this fourth halving, which we've never seen before, where the price movement actually happened prior to Bitcoin halving and then after Bitcoin halving. And there are a bunch of factors tied to it, Derek. I think that, one, a few things came to light. It's constantly reminded to me, Derek, that how correlated crypto is and Bitcoin being a structural asset to the overall global macro and liquidity, that a bunch of things affect this price movement. Primarily supply side. So Mt. Gox today announced a bunch of its repayments of some of the confiscated assets back after so many years, which means that it increases the supply side pressure to, starting in July, pump in a bunch of Bitcoin into the ecosystem. Second thing I think is there's a post-halving, there's been a lot of movement, which is super interesting, and we'll discuss that here as well, is around mining, which is the production line of Bitcoin. A lot of consolidation with the industry, trying to rejig the entire investment landscape of the power and the investments into the mining rigs. For example, the Bitcoin miner Riot Platforms was in talks with buying a bit farm, which is a consolidation event, looking to overhaul the overall sort of engaging sort of takeover attempts that has been thwarted. And second thing, which is interesting, which we should spend some time, is that Bitcoin miner Hut got some investment from some of the venture and private equity firms to repurpose that infrastructure for AI workloads, which again, we'll double click on that. So there's a little bit of the consolidation from a supply side, that all the investment that's gone into this would have to be repurposed or looked into from an investment point of view.
Yeah, look, Nitin, this is really fascinating. As we were saying earlier on, you realize that Satoshi Nakamoto has designed this in such a way that the Bitcoin mining becomes more difficult, of course, as Moore's laws cut in, and the equipment becomes superior and able to calculate faster and compete better. The price of Bitcoin goes up, so therefore you can halve it. But at the same time, if you're running into challenges and there's too much supply, then it'll become less profitable to do the halving. If artificial intelligence comes in and these ASIC farms, these huge mining farms, start getting deployed to artificial intelligence, what happens? The supply starts getting taken out of the system, in which case it starts becoming profitable again to mine Bitcoin. It's quite an extraordinary thing that someone projected this future position out, not necessarily that AI was going to play a major role, but that supply would be able to be consistently rebalanced, isn't it?
Absolutely, Derek, and that's a really brilliant point, that the entire sort of the sliding scale mechanism of incentive economic system that drives the incentive for the power consumption and the investment into the mining rigs that have been happening over the years. And every time you have this, but this AI thing is new, and I'll tell you why it's new. I've been spending a lot of time, Derek, in understanding the challenges of the new age data centers. And this is something driven by the recent conversation with NVIDIA, which is now the
Mm.
most profitable company, or rather the company with the highest market valuation in the industry and in the world.
In the
And
world.
I'm looking at this and saying, what does the future hold? Which is the infrastructure from GPU perspective, which is the lion's share of processing that AI workload does. So there's a massive shortage of the old age data centers. The Amazons and the Microsofts and the IBMs of the world who have built these data centers were designed for a cloud era, which is a shared infrastructure for processing the OLTP and OLAP, which is a different workload. Suddenly now you move to a much more specialized infrastructure requirements. That means new power infrastructures, new cooling infrastructures, XAI, which I'm in Memphis today, which XAI is building some infrastructure in Memphis and in Austin, Texas, which is where I live. Massive focus on cooling and infrastructure requirements. So these mining rigs, which were production line for Bitcoin, have transformed to say, hey, Bitcoin has similar challenges from an infrastructure perspective, the power requirements, the cooling requirements, because ASICs were designed for specific cryptography that was processed for Bitcoin. And so there's a little bit of repurposing of that infrastructure for AI workloads, only because the amount of investment, amount of infrastructure pressure going, and as NVIDIA is getting into this infrastructure play, a lot of investment is going into harnessing the Bitcoin, or in many cases, the crypto infrastructure for AI workloads, which transition has actually happened in the last 6 to 7 months. And I'm super interested because while some of these mining facilities have been shifting because of investment, because of course, lucrative incentive economic system for looking into AI for additional revenues, I believe that halving will consolidate the mining industries, which will then shift the hash power, which is the needed sort of compute capacity to continue mining, will balance itself out, which is one of the
Mm.
factors in the overall pricing calculation that we're looking at. So I'll pause here, Derek, to see if that made sense.
So, Nitin, it does. And what's extraordinary is that people may say, look, I'm really not interested in Bitcoin, in which case I've got to say, what are you listening to this program for? But I'm really not interested in Bitcoin. I'm interested in just artificial intelligence or tokens, or I'm interested in just the realm of decentralized finance. Like, all this is impacted because every one of these sectors require GPU capacity. And that being the case, then we've got to be looking at what's happening with the AI tokens. Now, remember, AI tokens aren't necessarily crunching artificial intelligence. They're often being service providers to artificial intelligence. But these various tokens
Correct.
often say that they are going to become major players in this realm of AI. But Nitin, you're telling us that there's an extremely competitive space out there for getting this processing capacity. So what does that really mean to some of these AI tokens?
Yeah. So, Derek, that is a $1 billion question, and I'll tell you why. Because if you remember, me, you, Mark, and Petros and Derek, the team got together and discussed DeepIn, which is decentralized physical infrastructure. And we talked about some of the lessons learned from what is real from an AI perspective. So, as Greg, who's a senior analyst, myself, and Petros, we spend a lot of time in the industry and figuring out what's real versus what's purely a speculative asset. And we had a long discussion on a Blockworks seminar that actually happened, a webinar that actually happened, where we looked into the fact that the decentralized infrastructure is not exactly ready yet for processing things like AI training, which is for AI to really work. You need to go through data curation, data formation, data modeling, AI modeling, model selection, and then comes the insight piece of it. So having learned lessons from that, I think a lot of consolidation in the deepen infrastructure as well, which is Ocean Protocol, Fetch AI, and Singularity Protocol, they all have merged to
Yes.
create a singular sort of model. That's a narrative that we begin to see in the crypto world, which is to me
Mm.
a telltale sign, Derek, that a lot of innovation and a lot of technology needs to still be poured into a true sense of how do we amalgamate the AI compute models and blockchain compute models that provides the notion of trust and tokenization of some of these infrastructure that DeepIn is proposing to tell.
Yes.
And that's one data point. Second data point, as we see in this mining infrastructure, is that there's a insatiable appetite for consumption of this compute infrastructure for simply supporting AI. This is centralized AI workloads that the Amazon and the Googles and the Amazon and the Microsoft of the world are dedicating enormous capacity, but are still unable to address the demands of the OpenAI and many of the large language and small language models for different industries. And so there's a natural competitive element of, for especially the people who have invested into the mining rigs. Exactly what happened with if you remember, the shift of proof of work to proof of reserve with Ethereum, when a lot of people who have invested in massive compute capacity switched that proof of work infrastructure to servicing AI, only because proof of stake didn't require the level of capacity, which was the entire selling proposition from Ethereum.
Yes.
To say, hey, we are being more green and we don't need all this compute capacity. So all those data centers repurposed themselves to solve for AI. And I see something similar happening in Bitcoin era, that the incentive economics has shrunk, which means now you have to. So you see a massive industry consolidation. And while the industry consolidates, the remaining infrastructure, which is compute power, energy, cooling, all that has been repurposed for AI workloads. And I think that this whole area of AI and blockchain and all the tech innovation happening in tandem, to me, this is a telltale sign that there's a lot of synergies between the basic infrastructure for DLT, blockchain, and related infrastructure and AI infrastructures, which means I see a convergence at some point that you need this massive compute capacity, massive energy, massive cooling for the new age economic system that these technologies are defining, I think, Derek.
Yeah. And look, as we've often said in the past, this industry is like commerce, but it's on steroids. It's operating at an extraordinary pace, 7 times, maybe 9 times the amount of achievement in 1 year that maybe the original infrastructure industries would do, because they were so heavily burdened down by structure, regulation, existing systems, etc. This industry simply sees a problem, like we're running out of compute power, we'll take it from there. And this is, I think, the reason why the industry will ultimately be dominantly strong. The other thing that we should consider is that our general view is that price goes up. Something's wrong when price goes down. And the reality is that price goes up and price goes down. Sometimes it goes sideways. I'm sorry, that's just the way it is.
Right.
Our view only 3 months ago, you and I were saying, hey, all the telltale, particularly our CIO was correctly saying the telltale signs are good. We're looking at potentially the loosening of more money supply. We're looking at heading towards a major election, not just in the US, but in the UK and Europe elections. And that generally tends to be a period when the government starts spending and encouraging people. And we were looking at really a positive runway. And all of a sudden we're saying, oh, there could be an interest rate rise. And people have been selling out of this marketplace. I think we have to realize a couple of things. One is, you might remember when we used to do our navigation using physical maps in an aeroplane, you were always taught that you did not read from the map to the ground. You read from the ground to the map. Now, the listeners might be going, what the hell has this got to do with it, right? But the fact of the matter is, when you're looking at the ground, you're seeing things that are actually happened. And those things that have happened, you can then see on the map. If you're looking on the map, you're seeing things that might be on the ground, but you'd have to make it up. And that's what we tend to do when we're looking at the market space. We interpret the market around us. There's 10 things happening. We see Michael Saylor's buying. We see there's a big sale of Bitcoin occurring. That must be the reason the price has fallen. That's reading from the map to the ground. I think the reality is, from the ground aspect, is that history has shown us that after a halving, it does go sideways sometimes. It goes down sometimes. It generally goes slightly up. But over a period of time, it always is dominantly stronger after a solid period of 6 months plus. And that is reading from the ground to the map. And I think that's what we need, is keep our heads about us when some are losing theirs and realize that's the case. And I think another thing is that if it's sounding quite pessimistic right now, then maybe make sure that the knife has hit the kitchen floor first before you pick it up. But I have certainly noticed since my involvement in this industry in 2017 that when everybody's miserable about it and they're all of a sudden saying things are changing, that is the best time to engage in the marketplace. And it's certainly something we'll be doing
No,
too.
Derek.
These just my thoughts, not advice, of course, but just my thoughts in regards to the market.
But Derek, I've always loved your analogies when it comes to aviation, which is flying, because of your passion and your interest. And at the same time, I'm surprised that your car analogy has not popped up in the last few episodes, which makes me wonder if you're still in touch with that passion of yours. But on Bitcoin pricing, I couldn't agree with you more, Derek, and I did some research. So here's my sort of a narrative on what's driving the price. And I agree with you. I'm still very bullish. I'm still very upbeat about Bitcoin, but there are a few things that are market forces that you can't expect any asset class to keep going up and up, because there are economics that drive the whole element. And to me, the Bitcoin going up and down, to me, is an indicator of utility of it. The Bitcoin being a store of value and a medium of exchange of sorts is giving the ability for Bitcoin miners. We discussed the industry consolidation, which means miners are figuring out what they want to do. And to figure that out, to even make the pivot, which is corporate structuring or financial structuring, they need capital. And the biggest capital they have on the balance sheet is the Bitcoin they've mined over time. So there's a whole notion of need to aggressively sell the Bitcoin because they want to take advantage of the upside of the highs that Bitcoin has seen since halving. Second thing, I think, is profit taking. Bitcoin was on high for the longest time. It's reached all-time highs. As the question then becomes is, can not just the ETF, the fund managers, the institutional investors, and the miners take advantage of that high to monetize on some of the investments they've made over time, because they have to pay bills. I mean, many of these mining companies, they have to have an operational cost to it. And then you have the likes of Michael Saylor, who are a balancing act, in my opinion, there's a common adage in the industry, Derek, that when you want to sell your Bitcoin, there's always a Michael Saylor there to buy your Bitcoin from you. So there's a little bit of those demand pressures that Michael Saylor is driving from his perspective. And then there's always global macro, which means that we are in a really weird spot, Derek, because I'm speaking to some of the central bankers here in some of the conversations where gold has taken the lead in store of value. There was a whole documentary on how the central banks around the world have moved away from US Treasury and invested in gold as a reserve asset, simply as a vehicle to be able to preserve the value of their investments and not go after US Treasury. So gold demand has gone up with respect to the US dollar sentiment weakening due to petrodollars being the 50-year contract that we had with Saudi Arabia. That has expired. Overall demand for US Treasury is dropping. There's a silver lining in this whole thing, is that stablecoin bill needs to be passed because somehow the existing administration needs to be seen to do something about it. But these are some of the factors, in my opinion, Derek, that are contributing. That includes global macro, the sell side pressure from the mining companies and the institutional investors, the Mt. Gox supply shock, which has dumped in a bunch of Bitcoins into the system. This is a few things, but I think it'll change, Derek, and mark my words that once we begin to see the monetary policy indication towards loosening and the current tightened monetary policy, which means interest rate cuts, we'll see this drive back up. I just believe that it's a risk on, risk off asset equation when eventually you'll find the liquidity come into this. So I'm optimistic. There are some dark clouds. Elections are on our way. There's a bunch of things happening, but I'm optimistic about this, Derek.
Yeah. Look, it's fair to say that most of the fund managers expected that the major tokens would be the first run as per normal, and then the alt runs would follow fairly promptly afterwards. And we haven't seen that. We haven't seen the run on the alts to the level we thought before. Most of the run and performance has occurred in the Bitcoin, Ethereum, Solana section because it hasn't moved across. So we should expect that sort of movement once those tokens have taken a reasonably firm move forward, and then we'll start seeing this movement across to the alts and the engagement of the alts. But to finish off today, and I hope this is useful, I will give you a motor racing analogy to this. It's not difficult, it does make sense. And that is, when you enter a corner at speed, obviously you set the car up, you brake it so that put the brakes on so you're stable, but you lift your eyes to the exit. You never look at the bonnet. You always look at the exit. Because when you look at the exit, miraculously, the car makes it there perfectly, because your entire body is set up to take it there. And that is the same in this marketplace. It's exciting that we look at this bonnet on a day-to-day basis, but what we should be doing is looking at the exit of the corner. And that exit of the corner, by the way, is either your exit of your investment or the longer-term view of this crypto space. And I see the corner very clearly, and the lumps and bumps in between, we'll navigate our way through them. Hey, that's about it for today, I think. Nitin, what do you think? Anything else you want to add?
No, I think this is a rich conversation, Derek. Always enjoy chatting with you, and looking forward to next. We're supposed to have guests today, but we'll have to rejig our scheduling to bring the guest from institutional investment side. So we'll do that next week. But really, always amazing chatting with you, Derek.
Terrific. And you too, Nitin, as you say. So for those that are listening, please subscribe and share with your friends, like-minded people. If you've got anything you want to add, want to be on our show, particularly want to add comments, etc. for us, we're delighted to hear from you. All right. See you all next week. Bye for now.
Take care, Derek. Bye.
I hope you enjoyed today's episode. Please remember, subscribe, share with friends. Bye for now.